Okay, let's get started. Sorry about that. You should be able to see the screen okay. We're looking at charts of the euro, and I'll grab that one more time for you in case you can't see it. Good. Yeah, sorry about last time. We had some connection issues. And good question there. Hold tight. What have you been trading today? Well, what have most people been trading today? And my guess is going to be it's the euro. What have most people been trading the last few hours here, last few days, more than anything else? My guess it's going to be the euro against the U.S. dollar. Reason why we're starting here, I'm sure it's not everybody, but my guess would be it's the majority. That's really where the kind of key low-risk, high-reward opportunity has been. So you should be able to see a few charts of the euro, and then that chart in the upper left corner is the S&P. Okay. So if you remember our last session, we really highlighted the euro because the euro was coming into a larger time frame supply level. If you're new to these types of sessions, and you may hear some words in the session that I use, such as supply and demand and things like that. And so I encourage you to go back and watch some of the recordings if you don't understand some of the things we're talking about in here. I'm going to try to really just to stick to the live markets more than anything else and apply the strategy that we work on day in and day out here at FX Streets. Sure, Ali. When price goes 50% or more into a level, we probably don't want to take the next retracement back into that level because that suggests that a good chunk of the supply or demand in that level is already used up. Okay? It's a pretty good rule of thumb to use. All right? And this euro on the weekly chart is a very good example. We'll get into that in just a minute. Okay? So Simon, let me see what you're writing here. When you trade, if you're trading products in a larger time frame, watch on the smaller time frame. Rick Wright said not to do that. I do agree. However, if we're trading on the smaller time frames, you certainly want to know where you're at in a bigger time frame. But when you flip it around like you're writing here, I completely agree with Rick. Rick is an online trading academy Forex instructor, so we pretty much agree on everything. Okay? All right, so let me dive into the charts here, and then I'll get back to questions in just a little bit. All right, good questions there. So we highlighted the euro last session as a market where we should find some good opportunity because of where we're at in the larger time frame. Take a look at the weekly chart here. We pointed out this key supply level on a larger time frame, this being a good level because of how prices left the level initially. Then we saw prices came back to this level, just touched this level and dropped. We had this area and this area here in FX Street. So given that prices just touched this level and fell, we were interested in potentially selling again when prices came back to this level. Okay? So prices eventually in this green candle finally touched this level again, went a little bit deeper into the level, quite a bit deeper, kind of expected. We expect to go deeper. That was pretty deep. But now prices are falling from this level. And anybody take any short positions in here? When the smaller time frame short positions showed up here, they all worked out pretty well. And I noticed a few people bought today. I took that trade too, but I'm embarrassed to show you because I bought almost at the low and only made about $800 on it, so $900 on it. So got out of that way too quick. But I had to get ready for this session and other things. So, all right, excellent. And I want to share something with you. Just want to share what I try to always do to make sure you understand that I'm doing what I'm suggesting or what I'm offering up to you. I don't want you to think that I'm just putting trades out there and not taking them. I take as many trades as I can from what we put out there. And so let me share the last, since we met the last couple of weeks of trading with you. This will just take literally 30 seconds. And I want to point out that a lot of this gain has come from that euro level or euro levels associated with that level. So that's the week before last. That's a trading account in the XLT. You should be able to see that. And again, what you don't see in there are the individual trades, but a good chunk of those profits came from the euro. Okay, coming near that level, trading up to that level, away from that level, And then last Thursday, again, you could see a nice chunk of the gains there from the euro again. Okay. And then, of course, there's Friday. You should be able to see Friday there. Again, now not every single trade is a winning trade, but at the end of the day, it's a decent gain. And again, decent chunk. On this day, not a lot of profits came from the euro. And then, let's see, yesterday, let me get yesterday up here for you. So a lot of account I trade to try to check XLT levels. Again, some nice profits there from the euro. Okay. Now what I'm showing you here are the Forex futures. Okay. Those trades were taken in the Forex futures. Same market as a spot Forex, just a little maybe safer and easier way of doing it. That's all. When you're trading short term. None of those were swing trades. Those were all very short term. That's all very short term day trading, very early in the morning, all done before, right now I'm actually in Canada. I'm in Ontario. It's 7 o'clock in the morning here, so all those trades are typically done, by 7 o'clock in the morning, 8 o'clock in the morning, I should say, Eastern time. But again, trading off the same levels that we're going over here, same strategy. So another thing we want to do, and this is kind of, based on the question we had earlier, okay, so you should, some of them, it depends if an XLT session is going on, always depends if I'm leading it or not. It totally depends. Some are from Pro Picks. If you haven't seen Pro Picks, those are part of the XLT program now. So I'll look in there every day. Okay. Hardly most are in and out before the stock market opens. My days tend to be pretty busy, so, and as you know, the Asian session is a really good session. If I had to pick one session, I prefer, the kind of Asian London session, but small time frames. So take a look. So because the euro is in this weekly level that it's now falling against, right? This bottom line on the weekly chart of the supply level is right at 142, call it 80. So remember last session we had, if we go down to one time frame to this daily chart, okay, let me grab it for you. Okay, so you can see on the daily chart here, we now found a level on the daily chart, remember last session, above the 142.80. So this daily supply level is inside the weekly supply level. I cannot express enough how key that information is. Okay? When we go to smaller time frames and find supply levels inside that weekly supply level, now we're stacking the odds in our favor. And this one's worked out for about 200 pips so far. Okay? I'm not in this one right now. All right? In fact, my only trade in the euro today is I bought near the bottom there. I saw a couple other people did. Okay? All right. Now, Andrea, are you trading the spot market or the Forex futures? Okay, and by the way, if you're in this trade, not a bad idea to move your stop to break even, because the break even spot would be in the upper end of this supply, the new supply level. Yeah, so Andrea, as I point out almost every session, I'm not saying it's impossible to short-term trade spot Forex, but in my opinion, you have a much easier time doing it through the Forex futures for a number of reasons. Okay? I think swing trading the spot Forex market is great. Short-term trading, when I say short-term trading, I'm saying probably anything on a 15-minute chart or less, I would do through the Forex futures. A much easier time for a number of important reasons. Okay, great, Haley. Yeah, for a shorter-term trade, it's probably okay, Paul, but you're absolutely right. For like a swing trade or something you're going to hold on to for a big move, I agree with you 100%. Not a great idea. Okay? Absolutely. And I just was not around to, I just didn't jump into that. I probably should have the short there. So that's the euro. Not a whole lot to talk about. It's doing what we thought, and it's taking a little time, but that's okay. Remember, this is the second time into that level, so that means, I'm saying on the weekly, so that means more aggressive profit taking, right, and fewer targets. Okay? Yeah, so trade daily. So it depends what you're planning that trade from. Are you planning that as a swing trade or a short-term day trade? You know, it looks like that one, you'd probably be better off planning it out as a longer-term trade, but making sure that you have a profit margin in that larger time frame. William, I would not trade the micro futures. Not a lot of volume there. Not enough volume to be that comfortable. The bigs, like the euros, it's 12.50 a tick. So make sure you're okay with that if you're going to do that. Okay? Let's see. Someone's asking about how to identify supply levels on a market that's running at an all-time high like silver. We only identify supply levels when they show up. So you have to wait for one to show up. And before that, just keep buying pullbacks to the demand levels as long as you have a profit margin. In other words, the breakout of your demand levels needs to be at least 2 times the size of the demand level for it to be okay for you to buy a pullback, right? We have a lesson on that in the recordings. Okay? And hopefully I'm not missing any questions. I'm going to try to catch as many as possible. But if there's any other questions on the euro, looks like we're kind of all set with that one. I could try to find one more level if you like. Let's find another level. See if there's one on the hourly chart here. Something likely to show up. Let me pop this chart up. And nothing that great, but we can. Let me do this here. Just a second. Just want to take kind of an X-ray snapshot of this 60-minute chart. See if we can find another supply level above, sitting inside that weekly supply, and then we can pop over to the euro, Johnny, in just a few minutes. Okay. All right. I'm going to draw a level in here on the euro. Not in love with it, and I can tell you myself, I'm probably not going to take this trade. But if you're short-term trading, I wouldn't be surprised at all if prices bounced off this level. I'm really hesitating to put this out there, but not as strong as the other levels we put in. But there you go. You can take a look. Okay. All right. So we've got a little supply level up there. Now that we're looking at the spot market, right around 143.70 to 143.90 with a stop just above that. Again, full disclosure, I am not going to take that trade. I'm not in love with the level itself. But just because you had that little dip at the beginning of the level. Note that the S&P in the upper left corner is climbing at 1302. I'm not going to pull up the S&P chart because this was Forex session. But if you trade the S&P, you might want to take a look around 1311. Okay. Haley, that's okay if you want to do that. Not a bad idea. Scott's asking a great question. Do the levels have to be inside larger time frame support resistance or supply and demand? They don't have to be. But 2 things. Number one, the odds are going to be, stacked in your favor if they are. But if they're not, that's okay too. Just make sure you're not taking a small time frame demand level as a buy signal anywhere near a larger time frame supply, or you're not taking a smaller time frame supply level as a short anywhere near larger time frame demand. Okay. All right, so we could probably move on past this market. I think we're pretty set. This market's just doing exactly what we thought it was going to do. And let me pull up the yen. Someone's asking for the yen. Just a minute. Yeah, this strategy should work on any and all time frames. I mean, we've been an online trading game. We've been applying it on all time frames for many, many years. So if you have questions, you can always email me. Some of you are already in the XLT program, the futures or the Forex. Oh, remember too, one thing I wanted to make sure, I see people go from, some people jump into the XLT, the Online Trading Academy, and they go right into the Forex XLT. That's fine, but remember too, is a big thing, if you do that, and I'm saying this because I don't always get to talk to you before you do it, you may want to consider the XLT futures, because inside the XLT futures, okay, you get all the Forex in there. Does that make sense? So inside the futures, you get the equity index futures, the bonds, energies and metals, right? Commodity futures, and all the Forex futures. Okay. Oh yeah, the indicator lesson we're going to do next time. This time, I'm sorry, a little goof up there, because we missed our last session due to technical issues. Okay. And so we're just going to kind of go over the markets here, and then next session pick up on that. Sorry about that. Julian, if you don't mind, resend that email. I'll get back to you today, I promise. Okay. All right. Yeah, send me an email if you have any questions. Okay. And, all right. Okay. Yeah, just trying to help there. That's all. Just trying to help. So, okay. All right. Let's move on. So, let's see what we have coming up in the yen. Now, I haven't put any lines on this chart. I haven't taken a ton of yen trades since the big week for the yen was at all that Japan stuff. Once that settled down, kind of the yen quality level settled down as well. Yeah, I don't really use indicators, Abel, but if you're going to use them, I think there's a proper way of using them, and we incorporate the levels into the indicators. We used to do that lesson quite a bit at FX Street, but haven't done it in a while, so we'll do that again and apply it to the live market next session. So take a look at the yen, and why don't we start with the larger time frame? Okay, I'm going to blow this up here, and we'll kind of do this together. All right, let me take another quick snapshot of this. So let's start with supply levels. Where would we find our supply levels on this 240-minute chart? Because if we can get some nice levels on this time frame, that'll help us with the short-term trading and certainly offer trades in the bigger picture as well. How about a supply level or two on this larger time frame? Where would you think they are? Someone's saying 83.50. There's a pivot high at 83.50. Anybody else? Remember the definition, the picture that represents strong, willing supply and demand. Let's go over this here. And let's see what you think, and then we'll draw some lines in and set up some trades like we did in the euro. So hopefully, the goal here is that we can make some money while we learn how to do this as well. Earn while you learn. Let's see if we could do that. All right. Okay, let me grab the chart again. 84.60. Okay, so you typed in some levels. Is that where you typed in some levels? Let's see. Some people said 82.50, 83.20. Yeah. So Simon, nice job there. I think you kind of had that one. Right? We're looking for a little cluster of trading followed by a decline in price. Okay? Remember the lessons, right? What we're looking for. Okay? We want to see, understand, if you're new to this, the reason why prices could not stay at these two levels and had to drop away is because behind the scenes, supply exceeds demand. Willing supply exceeds willing demand. Okay? Everybody in Forex says, oh, well, if we could only see volume, if we could only see where the bids and offers were with the banks and the institutions. You can see that. It's right here. Why couldn't price stay here? Someone had a lot to sell right here in these levels. Okay? And let me ask you this. Whatever bank, institution, whoever they are, were they able to, did they get their whole order off? Were they able to sell everything they wanted to sell? Did the order get filled completely? Right? No, the order did not get filled. How do we know that for sure? Because prices fell away from that level. There were more willing supply than demand, right? Okay. So, I see some people typing in some other levels. There are some other levels above. I put in this level just at 84.50. I just didn't put it in because we're not there yet. I can draw it in for you, and then I'll give you specific prices. And now, often when we have our lessons in here and talk about the odds enhancers, that's what really makes the XLT work, are these odds enhancers. And we, obviously we can't go over all of them here, but we can go over some. One of the key ones is levels on top of levels. Okay. All right. So here are the three levels that we're looking at on this time frame. Okay. Now, obviously, the higher ones are going to tend to work better than the lower ones because those are higher on the supply-demand curve. Make sense? Okay. Those are higher on the supply-demand curve. The pivot high at 83.50. Pivot high is okay, but we can take things to another level here. All right. Remember, our definition of supply and demand is very different from conventional textbook definitions of support resistance. Okay? Yeah, so Hold Tight is asking a good question. It says, would you wait for price to come into the 240 levels, look for a 2-minute entry? You can do that. So maybe there's a little too much risk on these levels. What you can do, like what I showed you my trades and the statements from the last couple weeks. Again, those are short-term trades. So what I'm doing there is letting prices come into these levels and then coming down to like a 5-minute chart, whatever, and finding a little supply level that shows up inside that larger time frame supply level. Remember with the euro that we looked at, inside that weekly supply, if you look at a 5-minute chart, okay, if you look at a 5-minute chart of the euro inside that weekly supply level, you'll see that the demand levels did not hold, but the supply levels did. Okay, so you can do the same thing here with the yen. All right. Now, what about some demand below current price? Yeah, Harley, this is a 240-minute chart. Again, you can try to lean against these levels. Make sure there's a good profit margin when you get to these levels. Those upper two look like there should be. Not sure about this lower one. Yeah, so we've got some 81.50. Yeah, that level's pretty obvious there. The only downside with that area, a lot of candles there. We don't typically like that, but so I'm going to go pretty conservative there and put this top line snug up against the lower candle bodies. Okay, I'm going to keep this one real conservative and low risk, just because there's a lot of activity there. Yeah, strong rally away, which is good. But here we've got a low line of 81.51 to 81.68. Right? Remember, this is a large time frame, so those are pretty tight levels on such a large time frame. But again, when prices come into these areas, we expect prices to turn and change direction. Make no mistake about it. But again, if you know, this is a pretty big time frame for short-term traders, so you can always go down to smaller time frames. Have a 2-minute or 5-minute chart up next to this time frame. And when prices come into these levels, any smaller time frame supply or demand level that forms inside these bigger time frame areas, you know, that's what we're looking for, right? And these would be for entries and exits. Now remember, when we take profits, let's say we get short at the supply level, okay? You don't want to take profits at the demand level. You want to take profits before the demand level. Just like if we buy at the demand level, we don't want to take profits at the supply level. We want to take profits just before the supply level. So here's how you can do it. Let me pull this chart up, and I'll put a 5-minute chart right next to it, okay? And let's see what we can do here. Okay, so we're looking for some supply on the 5-minute, just above the 83 mark there. So let me scrunch this up and scroll back. And then we've got one sitting right under, let's take this level right here. This is just about at 83, not quite, but just about, so be careful with it. Okay. On this one, you're getting in just before prices hit that big area, which may not be a bad idea. Let me draw this in. I mean, don't make yourself dizzy. But, so sitting just under this big time frame supply area, we've got this 5-minute level sitting right here. Okay, and, you know, anything above 83 that looks quality, which there's not a whole lot on this 5-minute chart. Let me change this time frame, see if anything else kind of shows up. Yeah, this is a nice area of interest. I was looking at this on the 5. Let me draw this other one in. It's going to look really sloppy, but I'll try to make a nice little area out of it. I'm pretty confident in the area itself. It's just the level doesn't look that nice. It's not just a very, you know, not a perfect looking structure, but that's okay. Not all of them are. Okay, let me draw this one in. Now this level, I would like a lot better, and if I'm around, I would gladly take this trade. So that upper supply level up there, okay. Harley, you could definitely do this just on the 5-minute chart, but make sure you know where you're at in the larger time frame. So if the yen rallies up to above 83, it's going to be at or near this 83, you know, supply area here, right, on the 240. So that which you know, this upper supply level here lines up with larger time frame supply, right? Okay. This one below doesn't, so just be careful with that. So maybe if you really want to take this lower level, go in with half the position size. You don't have to go with the full lot, right? Okay. We've got the levels on top of levels concept going, and that's how you would do it. And the profits and trades I showed you from last week in the euro, this is pretty much how I did it. Okay. Okay. All right. yeah, and remember, if you're new to, kind of my sessions at FX Street, I saw 2 or 3 questions on trend. We deal with trends very different here, almost opposite of what other people do. Not trying to be different, just trying to be real. And so just be careful with that. Again, make sure you watch those recordings. It's not that we want to be buying in downtrend, always just buying in downtrends and selling in uptrends, but remember, think of the best trades we've had in here. Think of most of the trades we've had in here. Shorting at supply means you have to rally to supply, and on some time frame, that's always going to look like an uptrend. To get to a demand level, you're always going to be in a downtrend on some time frame. But remember, what people don't get is, the thing they don't get is this, really. Why do so many people lose at trading? Because they fail to realize that how you make money trading is exactly the same way you make money buying and selling anything else in your life, right? So think of anything you buy out there, right? Don't you always try to get it at a lower price? Aren't you always happy to get a sale price? Okay? Can you think of an item that you ever bought that was on sale? Anybody want to list something? What did you buy that was on, anybody, you ever buy anything on sale? Right. Yeah, Boyke, huge difference. Very big difference. Talk about that in a minute. All right, a car. So how much was the car initially, and then what did you actually pay for it? Do you remember? You don't have to be exact. So it's 10,000 euros. What'd you actually pay for it? All right, you paid 8,500. Were you happy, or were you sad and scared? Oh, with extras, great. So you got a cheaper price and it was better. So you were happy, okay? Now what if we charted what you did? What if we put on a chart what you did right there? Would that be an uptrend or downtrend? Right? What would that be if we charted what you just wrote there? All right? It's a downtrend, okay? But isn't it amazing? It's amazing that everybody is taught never buy in a downtrend. But in every other part of our life, we're taught absolutely wait for a downtrend, then buy. Right? And sell when you have a screaming uptrend in every other part of our life. But in trading, it's like taboo to say that. Right? Okay, again, I'll walk you through this real quick just to kind of hammer the point home, and then we'll go back and look at any charts you want. Okay? So here's my trade platform from this morning. That's just buying the euro. Okay. There's my trading from yesterday. This is all real trading. Okay. And then here's Friday. All right. Euro just about every day. There's Thursday of last week. And then there's the week before. Okay. Now I only want to take about 10 seconds doing this. But my main point with everybody here is this. Where do you think that money came from? Where did all that money... That's futures. That's trading mainly currency futures, Forex futures, which is the same markets we're looking at here in the spot. That came from somebody else's account who thinks that way, who thinks that you only buy in uptrends and you only sell in downtrends. Okay? That money came from people who fail to realize that how you make money buying and selling anything in any other part of your life, which you're already good at, is somehow different from what you should be doing here. Everybody's taught to do the opposite. Okay? So, as an educator, I say that's terrible. As a trader, you're going to learn to love it, right? And don't worry about people, you might think, well, if this works so well and you teach everybody to do it, it's not going to work anymore, right? Don't worry about that, okay? There are hundreds of millions of people being taught every day how to do this backwards. It's never going to stop, okay? All right, didn't mean to get off on that tangent. I just want to really, hit you between the eyes with the reality of how this stuff works, okay? So just remember, if you are a smart shopper out there, so we already know that Haley's a really good trader, right? Nobody's going to doubt that in here. You didn't pay $10,000 for that car. You paid, I'm sorry, Hayek, not Haley, Hayek. You didn't pay 10,000 for that car. You paid 8,500, right? 8,500 euro. So you're already good at this. Just chart that and do that on the screens. All right, let's look at another market. Okay. Yeah, Jake, I would say I agree or equal to. Okay. Okay. No, we're not saying go against the trend, Nizal. Look, in a bigger picture uptrend, we'll gladly buy pullbacks to the demand levels. But that pullback to a demand level on a 5-minute chart is going to be a downtrend, right? Okay. All right. So let's go to another market. I think someone want to look at the Canadian dollar. They said they're in a trade. If you want to let us know what trade you're in, we can take a look. I'll pull up the Canadian right here. Okay. Let's see. Please look. Hourly long. Okay, let's find an area to potentially buy against. So this thing's obviously in a bigger picture downtrend. The key here is selling rallies to big key supply levels. But let's see what we can find here. Okay, let's go down to this time frame right here. Let me blow this up and I'll capture the screen again for you. Okay, so you had some numbers come out in 7. Looking to the left, you're into this area where the last time we were here we bounced, that was a pretty big move higher. This is just a really sloppy area and we've been into this area before. Having said that, how prices fell into this level, I wouldn't be surprised if they rallied out of this area and pretty strong, that they could do that. It's just tough let's just see if we can map out a real level. Yeah, this is a tough one because looking at how we dropped into this area, the chart is suggesting you could easily get a nice pop out of this area. In fact, I wouldn't be surprised if you retraced most of that move. But this area is coming into, it's going to be difficult to figure out where to put your stop. The obvious place is right below this pivot low, but that's kind of a big stop at this point. So what you can do, what I would typically do there is go down to a very small time frame. And let's do that. And once a small time frame demand level shows up, I'll potentially buy a pullback against that. So let me map that out for you. And remember, the levels that we're looking at, you may see a level and think that a level's not holding, but remember, it probably doesn't meet the definition of a level that we're talking about, right? And so take a look at this 5-minute chart of the Canadian. Notice how it's kind of slowing down and basing sideways here. So now I don't know that this is going to become a level, but this is something that I do pretty often. So let me draw some lines in here. And again, this may or may not become an area. Okay. But what I do with these is this. So let me draw. This could very easily keep drawing. Dropping, not saying buy it here. All right, so I would measure the top to bottom here. So we're at 95. This is a little trick. 95.83 to 95. Call it 75. Okay. So 8.6 there, right? About 75. Let's check that to about 83. Makes sense. Let me grab this again. So about 8 ticks there. So if this thing rallies, say, 15 to 20 ticks out of this range, I would then buy a pullback to the level. But this is not a level for me yet. What we don't know is what is the real supply-demand equation in this area right now. We know the bigger picture is kind of into getting close to an area, but too big of a stop to map it out like that. So this could easily keep going lower, and if it does, that's fine. There's no trade to take. But if it trades higher out of here, specifically twice the distance of this zone, because that will ultimately be our risk. Okay, we want to let it rally out of here at least 15 to 20 ticks. If it does, so let's say it rallies up to like right up here, then it becomes a demand level. We would call it a demand level. and then we would buy a pullback to that level. Does everybody understand that? It's a very safe and methodical way of doing it. Okay, there's really nothing to think about. Okay, so price really has to rally out of that area. And you would do this on any chart, any time frame. Okay? No, Harley, we mean long. So, because someone's talking about buying this, I would not just buy it here, and I wouldn't buy it on a breakout. I would let prices rally out of this level at least 15 to 20 ticks, which is twice the distance from top to bottom of the level itself, and then buy the pullback. If it drops out of this area, which it very well may, then we do nothing. Make sense? Okay. What we're trying to figure out now, does willing demand exceed willing supply here? Or does willing supply exceed willing demand? I'm not going to guess. Don't guess. Don't try to guess. Don't bring any guesswork into this. Let the chart tell you. The chart will tell you what to do. Okay. All right. Someone wanted to look at the pound. Let's take a look. All right. Let me grab the pound for you. I didn't see anything great at the pound this morning, but let's take a look. All right. Here's the pound. Someone said they found some. Let's see, Al. What are you looking at here? We can take a look. Let me pull up this. The pound has really been on the move. The problem is, we've got to get higher than this prior wick. If we can get up to the 163.35 area, I'd be pretty interested. But there's just not a whole lot in here to do. Let me see if there's anything on a smaller time frame real quick. I mean, there's some 5-minute levels below, but I just wouldn't do much in the pound here. I just don't see a lot of really clear opportunity. Let's see, 161.30 on the hourly. Let me take a look. That's what you're looking at. Let's see. 161.30. Yeah, so we're pretty far from that. This 161.30, this will probably show up a little bit better on. Yeah, so you're talking about this level right here. Let me draw this in. I would really think that prices would bounce from here, but the reason, I wouldn't be surprised if they bounce from here, but the reason why I would not take this trade, there's something, one of our XLT rules would cancel this one out. Let me just go over it real quick. I see the level you're looking at. Okay, there you go. So you're looking at that level. And I see that level you're looking at. And, it's okay, but the problem is this wick on the bottom. See the wick at the end of the base? If there's a wick kind of halfway through to end of the base that goes pretty deep, pretty low, probably not a good level, right? Because we would be buying up here at the top black line. So take a look. So let's say, it may look like there's a lot of demand in this area where it actually rallied from, which is right at the origin of that big green candle. But what cancels this out for us in the XLT is this wick prior to the rally. What it means is, look, if there was so much willing demand, so much overwhelming demand in this yellow shaded area, okay, in other words, if demand really exceeded supply here, would it be possible to have this wick to the downside here? I mean, would it be possible for prices to fall lower, below 161 if, in the yellow shaded area, demand exceeded supply? It really wouldn't be physically possible, right? Does that make sense? See what I'm saying? So this wick to the downside cancels this out for us. Remember, think about it. You can't have excess willing demand in the yellow shaded area and price traded down to here. It could never happen. It's not possible. Okay? We do, so Scott, you're making a good point. So what if we include the wick? Well, we could include the wick, but now that stop is probably a lot bigger than we're looking for. You know what I mean? It's just not, you're right. You would do that. It's exactly what you do, but we wouldn't take the trade anymore. You know what I mean? Tight range hack is good. It's it's lower risk. It shows a stronger, tighter battle between the willing buyers and willing sellers, and so on. Okay. Makes sense. Let me get the charts back to normal here. Okay, let's pull up keep going here. So, yeah, it looks like the euro's really moving off that area down there. Again, as I showed you in the statements there on the platform, I'm one of the people that bought down there today, but I'm also one of the people that probably got out way too early, but that's okay. How many other people bought near the bottom today? That euro came into a nice little level. You know what? And not a bad idea to get out. I got out of that trade a little bit early because of where we're at in the bigger picture curve. And that's my plan, that's my strategy, and I'm going to continue to stick to it because it works over time. Nazam, I see what you're writing there, but if you haven't found the demand, isn't the demand and support, are you calling those things the same thing? Okay. Good. So, Haley, you took it. All right. And again, you know, this level up top looks okay, but, you know, decent. Remember, any levels, any supply levels you take in euro, ideally they're going to be inside this weekly supply. And this one up here certainly is. And the smaller time frames, you're going to have some others. Okay. But you're really going to need a big rally to get up to those. So kind of you know, what we want to do today, definition of the difference. Yeah, Boyke, I think you're talking about the difference between support resistance and our definition of supply and demand. Very different. Like, you know, one of the big things is I'm well aware that everybody has a different definition of support resistance. To one person, it's a Fibonacci retracement level. To someone else, it's a moving average. To another person, it's an Elliott wave point or a pivot point. I could go on and on and on. So instead of reinforcing something that's not accurate, why not focus on what you really need to look for? Price levels where objectively willing demand exceeds willing supply or willing supply exceeds willing demand. That part of the definition is not in any, you know, textbooks when it comes to support resistance. People are looking at prior highs and prior lows and, you know, I could go on and on and on. It's a whole big lesson we do. Okay? All right. The current level, not too thrilled about it. We let's see. Yeah, it's okay. You know, it's not the key level that I look for. Again, how prices rallied up there, I wouldn't be surprised at all if they came down to at least 142.90. Look at that rally. I mean, there's nothing really to stop it. All right, the S&P's got room to fall also. There's my email address, sseiden@tradingacademy.com. And because I know we're kind of out of time here, and just wanted to make sure we updated that euro. And thanks a lot for the nice words, and thanks everyone for spending time here. And next session we'll go over how to use indicators and oscillators. I think you'll like that. Turns out to be a pretty mechanical way of doing things, you know. So we will talk soon. Have a great week, everybody. Thank you.